Well, today is an interesting day. The market's going crazy today, and all the stocks on my screen are up. And I want to talk to you about Bitcoin a little bit, but really in terms of what a stock is doing and this brilliant strategy that the CEO of this company is doing. And I think he's going to make him the world's first trillionaire. I actually do. So the stock I'm talking about is MicroStrategy. It's this little company that used to be nothing. It used to just kind of have a niche little market in computers, and they've been around for a long time. And the company has now blown away all the returns for the S&P 500, for gold. It's the best performing asset, stock company, along with Bitcoin being the best performing asset in the market today. And it's because this guy, Michael Saylor, this guy right here, he's a brilliant strategist, and he's like an engineering kind of guy, and he geeks out, and I highly recommend you watch the Michael Saylor if you want to learn more about Bitcoin and even the market itself. But he's brilliant in the fact that he takes the profits that he makes at MicroStrategy and he plows them into Bitcoin, knowing that Bitcoin is an outproducing asset against the rest of the market, against the fiat market for sure. He also goes out and raises money based on his company. And he says, look, we're buying Bitcoin. That's what we're doing. Like, if you like it, we're going to put it on our balance sheet. And you know what? It's been brilliant. He's just like, I think the most recent financing that he's pulled off is a convertible note, but it's less than 1%. Now, interest rates are 5, 6, 7% right now, but he's paying less than 1% because people buy into a strategy that Bitcoin is going higher. I'm one of those people. I think Bitcoin in 5 years will be, $500,000 to $1 million because not necessarily it's so awesome, but it's because we debase our currency. We are devaluing our currency. That's why assets are going up. That's why the stock market's at all-time highs. So, what does all that mean? Well, if you're not into buying Bitcoin because it's too complicated for you, first of all, I recommend you study it. I've got some resources on this channel, and I've got some resources on my website, other websites, and my podcast. You can go find out a lot of information, but I highly recommend that you spend about 100 hours to learn it. I think it's going to be the future of money. I think it's already starting to become an accepted store of value. Now, how does that translate into the stock market? Well, there's a company called Coinbase, which really is probably the largest exchange that trades crypto and Bitcoin and other cryptocurrencies. But I don't like the chart on Coinbase. This is the chart on Coinbase. So look at that. Like right here is showing you, let me put it on daily. You can look at it and you go, hey, listen, I see that this is in a downtrend, right? You can see that. It doesn't take a brain surgeon to see that, right? But MicroStrategy is doing the opposite, right? MicroStrategy is going up. They just had a 10-for-1 stock split, I think, a couple months ago, and now this thing looks like it's moving higher. Yeah, it's just bounced off its 200-day moving average right in here, but the stock looks to me like it wants to go higher. It's back above its 50-day moving average here, which is exciting, and good things happen above the 50 and bad things happen below the 50. That's just the way it is. And you can see if you've been living below the 50 here for the last month or so, it hasn't been fun. But now the stock is moving above the 50. So how can we play it? Here's the way I think we're going to play it. We're going to play it using a debit spread. Okay. Now this is something that I call synthetics in my classes, in my stock training, and you can learn it too. But it's really like a layered on concept of covered calls. Covered calls are what I do all the time. This is a nuanced concept, allows you to get a little bit more leverage with more risk for sure, but it allows you to make a lot of money when a stock is moving up. And I think MicroStrategy is showing the signs of a stock that is moving up. So let's go back to put it on a weekly. I've got this little downtrending pattern here, but I also have this consolidation pattern here. It's a very subtle little pennant formation. What doesn't really matter that much is the pennant formation. What matters is that it had a bounce below the 200-day moving average or the 40-week moving average. Then we had a bounce above it, and now we're going above the 50. Okay, so if you like all that, then you keep going. Pretty good numbers on the company, but we know this is a Bitcoin company. So these numbers over here don't matter as much as some of the other things that I might talk about. Now, let's look at how we play this. So here's the option chain. The first thing we're going to do is we don't want to spend, $145 a share to buy MicroStrategy. Maybe we can get the control of the MicroStrategy shares, but invest a portion of it. So All right, so we're looking at the 80 deltas, okay? And so we could control the company itself. We could buy 100 shares and it's going to cost us roughly $14,400. Or instead, we could go in the money with these options. I like these 80 deltas somewhere around in here. Let's call it the 116s. And we could pay about, let's call it somewhere like $37.50, okay? So 37.50. And notice that 37.50 is what? A fourth of 144. So you control 4 times the number of shares with the same amount of money, okay? Now, what we're going to do is we're going to buy those, right? And then against those, we're going to create our income. So here we're going to go back to the October. You'll see this in a second here. This is the October, 28 days they expire October 18th. So you get almost a month for those. And we're going to go here and we're going to look at doing the, I don't know, I like the 150s, right? The stock is at 144.63. And if you do the 150s, you can get, let's call it $10.30 for those 150s. Let me show you how that math shakes out. By the way, that $10.30 is what we're after. That's the income. The base position that I just talked about, it's a synthetic. That position allows you to control the shares so that you can get the 1030. This is not about speculating on whether you think MicroStrategy is a bullish stock and it's going to go to a zillion or whatever. This is about getting the $10.30, okay? It's also, if we think the stock is going to go from 144 to 150, that's another $6 that we get. So I'm going to do the math on that. Here we go. Let's say that we have a $500,000 portfolio, and that means you really could buy 13,333 shares, or 13,000 contracts, roughly like that. Well, let's not max it out. Let's have some working capital in there. And so let's instead buy 10,000 shares or 100 contracts. Keep the math simple, right? So we're going to go out and buy the 100 November contracts that I just talked about. That would be $37.50 per share, $37.50 per contract, 375,000. And we're going to sell the October contracts expiring in about 28 days. The Novembers expire in 56 days, so you could potentially do this trade twice. And we're going to get 103,000. Now that $103,000 is the most important number on the screen. That's what we're after. We get that money as soon as we sell those contracts because they're out of the money. That's all ours. There are no other obligations. Now, ideally, we want that stock to stay at or above, where we're buying it now, which is roughly the $144 area. But if it goes to 150, boom, we get a bonus too. But let me show you that math in just a second. So you buy the 100 contracts for $375,000. You get back today $103,000. That means your total invested amount is $272,000. Okay, so you've brought down your invested amount $272,000. You're still controlling 10,000 shares of MicroStrategy. Now, here's where the bonus kicks in. You don't even need the bonus, but if MicroStrategy does go up, like I think it might, maybe it may not, but if it does go up over $150 a share, you don't make any money over the $150 a share. You're kind of out of luck on that. You've capped it because you're picking up the $103,000 now. But if it does go up from $144 to $150, you're going to pick another $6 up on the way up. And that means you're going to get another $60,000. So the potential on this trade is $103,000 in income plus $60,000 in potential capital gain, bringing you to $163,000. That makes sense? So you can make $163,000, by just hanging out for a month, okay? The potential ROI on this trade, and there's going to be some volatility. This is not an easy trade to sit through, is $163,000, right? Divided by your basis, which is $272,000, and that's 60% return. So you could potentially make $163,000 on a $272,000 investment. That gives you about a 60% return. And at the end of that period, you still have another 28 days or something, like 26 days left. So you could do this again. So let's say that it goes to $149.99. Those October contracts that you sold just expired. You can go out and do it again. Sell the 150s, pick up the at-the-money amount, the premium. You could do this again and potentially make 100% return on your money or more if the stock stays at or above, goes 150. All that is hypothetical. Bottom line, you're after that $103,000 now. You might pick up an extra $60,000 in bonus if we're bullish and we're in a green market and MicroStrategy is above the 50-day moving average. You put all that together, it's got the makings of a really, really good trade. So if you want to create some income, this is a monthly trade, so you can create income for a month. Pretty good income, right? And that's the idea, is that we get in a stock that we think is going to go higher. We're not always right, but we hedge our bet to the downside and we create that income. And that income helps us lower our basis price, our break-even price. If it goes lower than that, we have to take some action and do some other things, which I teach in my courses. But if it keeps going higher, stays higher than this point, you get to keep that $10.30 that we talked about. That's your income, and that's how a covered call and a spread trade works. All right? Hope you enjoyed it. I'll see you on the next video.